A recovery in global demand and spiking international prices helped oil giant Saudi Aramco triple its profits in the second quarter. Despite the jump in earnings, it doled out around $19 billion in dividends, which is similar to its payouts in recent quarters. Some analysts are calling on the company to raise dividends, but as Mobin Nasir reports, Aramco's got other plans for spending its cash.
The world's biggest oil company is raking in big returns. Saudi Aramco's net income surged by nearly 300% in the second quarter compared to the same period last year to $25.5 billion. The company attributes this to a rise in oil demand as the global economy continues to recover from the coronavirus pandemic.
Our second quarter results reflect a strong rebound in worldwide energy demand, and we are heading to the second half of 2021 more resilient and more flexible as the global recovery gains momentum. While there is still some uncertainty around the challenges posed by COVID-19 variants, we have shown that we can adapt swiftly and effectively to changing market conditions.
Experts say output increases by OPEC and its allies have not kept pace with growing demand, and that's driven up international oil prices and profits for oil companies.
The recent spike in oil prices is definitely a reaction or a response to OPEC Plus's failure to reach an agreement to increase production for August. The market was absolutely expecting some kind of increase, at least in the 400,000 barrel per day range. And the fact that OPEC has not delivered that, at least not yet, is definitely causing a lot of volatility in the market and price increases.
Other industry giants like ExxonMobil and Royal Dutch Shell have also seen their earnings spike, but unlike its competitors, Aramco is not raising payouts to its investors. It announced $18.8 billion in dividends for the second quarter. That amount is similar to what it spent in previous quarters when earnings were significantly lower. Keeping the dividend payout stable has helped the company amass more than $40 billion in cash since the start of this year, and it plans to raise more money by selling oil pipelines and other assets over the next few years. Analysts say oil companies may face more price volatility in coming months because output from Iran and the US is slated to increase.
It's possible that OPEC will reach an agreement to increase production and that we will see some more stability return to the market over the next several months. But just as likely, they may not reach an agreement and we may not see that kind of stability return. But there's also the wild card of Iran that has the ability to really increase exports to add between 700,000 and 1 million barrels of oil today, per day onto the export market pending a resolution of the negotiations with the United States. So that's always something that is on the horizon.
Holding on to a large pile of cash would help the company avoid any crunch due to sudden swings in prices. Aramco also plans to diversify its business into infrastructure development and the production of chemicals. Mobin Nasir, TRT World.